Good investing is more about good behaviors than it is good stock picking skills. In today's video, we'll go over the 3 keys to becoming a good and successful investor, and we're going to start right now. How's it going, everybody? Welcome back to the channel. If it's your first time here, my name is Jay, and on this channel I use my over 20 years of investing and finance experience to help you get the most out of your money. Today we're talking about the 3 keys to becoming a good investor. And I'm going to call them the 3 T's, because we're going to talk about time horizon, temperament, and tenacity. The first key to good investing is your time horizon. Investing is not a get-rich-quick scheme. I see way too many people take on way too much risk in their investing, end up going broke, and then either say, oh, the game is rigged, and that's why I lost, or B, oh, I just had bad luck, when really they just had poor planning and poor execution. So having the right time horizon is key. We're not trying to get rich in the next week or month or even in the next year. Investing in the stock market is about multiple years, and the longer your time horizon, the more successful you will be. It's one of the key things I've picked up from listening to Warren Buffett speak and reading about Warren Buffett over the years, is his favorite holding period for a stock is forever. And that's because the longer you're in the game with the stock market, the better your chances of making money. Look at any historical chart of the stock market, and you'll see when you expand it out, it goes up and to the right. The value of stocks increase over time without fail. But when you shrink that chart down and look at a day, a week, or even a year, it can look like a EKG chart, all up and down, random spikes and drops and whatever. And in that time frame, you are at the whims of the market timing. But expand your time horizon and you will make money investing. And the second T in the 3 T's of good investing is your temperament. To be a good investor, you need a calm, rational demeanor. You can't be a person that gets freaked out when your stocks drop by 20 or 30%, and you can't get over the moon happy when the stocks rise. If you're too emotionally invested in the ups and downs of the stock market, it's gonna lead you to make bad decisions. You're gonna panic when stocks are down because you're scared of losing even more than you already have, and you're gonna end up selling at the very bottom and locking in those terrible losses. Likewise, when stocks are rallying and optimism is abound in the market, prices are just going up and up and up, if you get that fear of missing out and you start throwing more and more and more money in at the top, your returns are probably not going to be as good because you're buying in the top valuations when all the hype and optimism is at its peak. And usually what follows that kind of mood in the market is a drop of some sort. So what you want to do is keep an even keel temperament, don't get too high or too low, develop a solid plan for your time horizon and the money you want to invest, and stick to it regardless of what's going on in the market at the moment. And that leads us into our 3rd key of being a good investor, our 3rd T, if you will, and that's tenacity. And that's because being a good investor means being able to stick with it and continue investing through the ups and downs. Keep on investing when times are tough. Like I just mentioned, you don't want to be the kind of person that bails when the stocks drop because you get scared. You need that tenacity to stick with it, stick with the plan, and continue investing. Because if you're able to continue investing when the stock market is up and down, no matter what it's doing, and no matter what's going on in your life, you're going to be a good investor and you are going to get paid off when it's all said and done. I talked about this in an earlier video, the scenario with 3 different investors. One starts investing early on, then stops and just keeps their money in and lets it ride. One starts later, invests the same amount, but because they started later, they end up with less overall. And then the 3rd investor starts young, continues investing, and they end up with the most money. And that perfectly illustrates our 3 T's to good investing. Time horizon, you want that long time horizon so you can take advantage of the stock market's historical upward trend. Temperament, You want to be the kind of investor that develops an investing plan and lets that guide your investments rather than emotion. And tenacity. You want to be the kind of investor that keeps on investing for the long haul. You keep on putting money in. You don't start and then stop, or you don't put it off because there's other things you want to spend your money on. You start investing, you keep on investing, you keep that long time horizon, and you stay calm, and you will end up with a ton of money when you go to retire. Now, all three of these things may sound like common sense, and really they are. And that's the key here, is investing isn't hard, it isn't complicated. But it does take the right kind of mindset and the right kind of outlook to be successful at it. And if you can stick to those three simple things, you will be a good investor, I guarantee it. But if you want a little more guidance on how to become a good investor, click either one of these two videos right over here. They will make you better with your money. Subscribe to the channel if you haven't already. Please give a thumbs up on this video. It really helps spread the word to other people. And I hope to see you in one of those videos.